Hi, everybody. This is Sree from BizBuzz. What matters the most in your business? Sponsored by My Work Belt. My Work Belt is a all-in-one software, particularly catering to service-based small businesses. If you have a huge filing cabinet, you subscribe to small business and you can get rid of the filing cabinet immediately. Everything can go into the cloud and it makes your life a lot easier. And today's show, we have Nathan Turner. Nathan Turner is a mortgage note expert. And one of the key uniqueness of Nathan is he hosts Diversified Mortgage Expo in Nashville, Tennessee, every May. So if you are interested in mortgage notes, and especially after listening to Nathan today, you're going to learn more about it. As a business owner and an investor, this is a subject very seldom anybody talk, but extremely lucrative subject. I hope you will enjoy the show today. Nathan, how are you doing?
I'm doing great. Thanks so much for having me.
Excellent. Thank you very much for giving us time and being open to share your knowledge and expertise on this show.
Oh,
Uh,
it's my pleasure. You bet.
yeah. So many of the people, I mean, myself, don't
Yeah.
know what is mortgage note.
Yeah.
So let's start that foundation and give us 2 minutes uh,
Sure.
description as to what is a mortgage note.
Okay. So yeah, a mortgage note, it's actually something we're all familiar with, which
Yes,
is kind of ironic because we all know about it, but we don't know anything about it. So
exactly.
if you want to go and buy a house, typically what you do is you go to the bank, you ask for a loan, they set it up as a note and a mortgage with
Yes,
your house as the collateral.
correct.
So that's a note and a mortgage. What happens after that, and probably people have experienced this, where you've made a few payments on your loan, and then you get a letter in the mail from the bank saying, "Oh, by the way, you're no longer paying us. Now you're paying this company over here. Here's the new address of where to send
Absolutely.
your
It
check."
happens all the time.
Yeah, I'm that guy. So the bank has decided that they want to cash out of the note.
Yeah,
They would rather get that lump sum of cash today rather than taking those payments over time. So they sell it off to either some other entity. And in this case, maybe it's me. So I
hmm
might be the one that now I am the one collecting your payment. Nothing changes for the borrower. They're staying in their home. They're making the same payment they were before. The only thing that changes is where they're sending the payment.
See, in my case, example, I bought mortgage from American Mortgage, is a company, right? And then,
Yeah.
as you said, within 2 months, 3 months later, I received the
Yeah.
letter from PNC Bank, and I
Yeah.
end up paying to the money to the PNC Bank now, opposed to the original lender who gave me the money. Now,
Yeah.
what you're saying is the PNC, in this case, the PNC Bank bought my mortgage note from the American Mortgage, and
Exactly.
now they are calling servicing my loan.
Yep.
Am
Exactly.
I thinking right?
That's exactly it. Yeah.
Okay, so you said you could be that, and can I be
That
that?
could be me. Absolutely. Anybody can be that. That's kind of the interesting part that I think most people don't know about is individuals can buy these loans. Now, buying from a bank directly, less likely. If you're
Mm.
buying from a bank, typically they're going to want to do, minimum $10 million trade where you're buying that many loans at once. So it's unlikely that you're going to be able to go to the bank and say, "Hey, I'm interested in the loan on this property. Are you looking to sell that?" They're probably going to say, "No thanks, see you later." Go go
Yeah,
take a
that's
hike.
why nobody knows about this,
Right.
right?
The subsection of this is and where people can get involved on a much smaller level is there is a huge seller finance industry out there.
I
Over
see.
$23 billion worth of seller finance notes are created every year. So
Oh
it's
my
it's
God.
not nothing. There's a ton of them out there. And then, somebody, same kind of thing. Somebody owns a home. They decide they want to sell the house, but they would like to structure it as a seller finance deal, creative finance, seller take back, whatever you want to call it. It's
hmm
seller finance is kind of the umbrella term. So they've created this new note where they've collected a down payment, structured monthly payments with the
Yes,
principal and interest.
yes.
They then have that same situation where they say, you know what, I would rather have a lump sum of cash today because XYZ. They want to go on
I might
vacation. They
wanted
want
to do
to
another project or or something.
Sure,
Yeah,
anything.
yeah.
And so then they're looking for somebody like me that says, "Hey, I'll buy your note." And
Ah,
one of the cool things about this is, from my perspective, is that when you're buying a note, it's almost always done at some kind of a discount.
I see.
And the discount is going to be contingent on all kinds of factors. What's the current interest rate? How long is the term? How many payments have been made? Where's the property located? Like there's a host of different things that we look at.
Hmm.
So it's the discount depends on all kinds of various factors. So it's hard to say, 80% of or 75% of or something like that. It
Hmm.
really depends. But in any case, it's done at some kind of a discount so that, let's say, for example, the posted interest rate is, call it 6.5% today.
Yeah,
If I'm buying at a discount, then my rate of return actually goes up. It's called yield,
yeah,
but my yield actually goes up to it may be 9, 10, 11%, perhaps even higher.
correct.
Yeah,
Because on $100,000 note, I might be buying it for $80,000.
exactly.
So even though it is 6.5% on $100,000 note, when I'm buying it for $80,000, I am yielding at 9%.
Right. Right.
Ah, wow, wow.
That's how it's done. And that's
Now, but
that's where
why
the
would
money.
anybody want to sell it on a discount person? Like, why would anybody want to lose $20,000 on a $100,000 note that they sell it on a seller finances?
Mostly just because they're looking for liquidity. They want
Mhm.
that lump sum today. They've got some other project. They've got, I don't know, sending a kid to college. It could be anything. It could be all
Mm.
kinds of different reasons. But for whatever reason, they need that cash today, and they're
Mm.
willing to take a discount in order to get that.
Mm. Now, then how would the banks, if I wanted to buy it from a bank as an
Hmm.
individual, I cannot do it. But what if I've created a business entity? Can I go to a bank and buy it?
You can. You're probably going to need some pretty deep pockets, but yes, absolutely. Yeah,
I
you're
see.
going to need. Yeah. First of all, you're going to need the money, and then you're going to need the right connections, and that's those
Isn't
two
that
things
is
are
that not
key.
the case for everything?
Right. Yeah.
That's interesting. So Nathan, let's say if somebody, or even for the, I'm going to use myself as an example, right?
Sure.
If I have a, say, let's say $50,000 in my hand, can I
Hmm.
do it? Or if I have to have a minimum X amount of dollars to do anything like this.
Yeah. So let's back up for a second because there's a couple of different ways that you can get into notes. So if you want to be the hands-on, you want to buy your own note, $50,000, yes, you can do that. There are definitely notes that are available for that. If you want to get further into the weeds, you can buy a partial. So let's
Mm,
say you're going to buy the length of the note is there's 20 years left on the note.
hmm
You're going to buy the next 3 years worth of payment. After that
mm.
3 years, it reverts back to the seller.
That's
But
even
so
more
you can get
interesting.
involved with even smaller amounts. So there's that way, and you get the hands-on, or you can do it in a passive sense where you find somebody who has a fund. I've got one of those,
Yeah.
and you can just put the money into that, not have to do the work, let somebody else do that for you, and still collect a return.
Oh, so you still be able to make money on it.
Absolutely. Yeah.
Yeah. Okay. Okay. Because
Yeah.
this is all about interest rate, right? If I am making less than what the current interest rates in the market, then I'm actually losing money.
Right.
Now,
Yeah.
is this seller note, buying this note should, as you just put it, it should yield more than what the current interest rate in the
It
market. Then
it
only it
better.
makes sense, isn't it?
Better. Yes.
Right. So, where would anybody go buy these notes? Is there a
That's
place where the people are selling and buying, like stock market? Is there any place
not
like that?
exactly. Yeah,
Uh-huh.
no, not really. There are a couple of we call it like a note exchange, a couple of different websites that are out there. Paper Stack is one of those. It's Paper Stack with no K on the end of it. And I love those guys, so I'll give them a shout out. But that's just a place where anybody who owns a note can go in and list it for sale. So
Okay.
it's not it whoever has decided that they want to list their note there. So it is by far not all the notes that are out there.
Yeah,
It's a,
yeah.
a small segment of them, but it's a good start, and it's a place
Hmm.
where you can start to go and see what's out there, who's got stuff for sale, what that looks like, what the numbers look like, and you can start to look at it that way. Other than that, it's a lot of networking. It's a lot of just getting together with people and exchanging phone numbers and emails and all those things and say, so I'm looking for a node. Does anybody have anything for sale? And just a lot of networking.
So, in your expertise, Nathan, do you advise the people, hey, I'm trying to buy this note. Can you tell me,
Yeah.
is it make sense to buy at this discounted rate or not? Is that something that you would advise, or you would offer, okay, I have these notes, you can buy it for a 20% discount rate. What would you do for, how would you help small businesses?
Uh, the first thing I would advise is get some education because
Uh,
as somebody who's come from a real estate background, that's great, and a lot of people that come into no business come from a real estate background,
yeah,
but it's not the same thing.
mm,
We're buying the financing attached to the real estate, but we're
correct.
not buying the real estate.
Real
So
estate.
it's a different game, and you have to learn the rules because there are rules, and every state's different, and you've got to make sure you know what you're doing. So that's the very first thing. And again, that's not a pitch because I don't teach
Yeah,
it, but
yeah.
I can certainly introduce you to people who would be happy to do that. So that's the very first thing. And then yes, as an individual, if you're looking for that, that's part of that training is they'll
Hmm.
go through and they'll go through some example deals with you and say, so this is a good deal and here's why, or this
Mm,
is not a good deal and here's why. And so
mm,
you can
mm.
start to understand what makes sense and what makes a good deal, what makes a not so good deal.
Right, right. Now, Nathan, is there a government regulations in it, or is it like an open market dog eating dog fight?
It's a little bit of both. So there is some government regulation on the lending side. So if you're the person who has created that note, it's a law called Dodd-Frank, if you want to go and look it up. But there are some lending criteria where you have to qualify the borrower, make sure that they have the ability to repay, and there's some steps that you have to go through to be able to ensure that. So that's the
Correct.
government regulation side. On just the note buying and trading, uh, not really. Certain states have debt collector licenses that you have to obtain.
Mm-hmm.
Uh, Most states don't. So it
Mm.
really is just kind of an open competition. I'm competing against colleagues and friends all the time where we're both looking at the same note that we want to buy and
Ah,
we'll
that's funny.
bidding process. And it's funny because it's a really a friendly competition where
Yeah,
sometimes I win, sometimes they win. We all shake hands and have fun at the same time. It's great.
of course, right?
Yeah.
It all depends on who has what kind of a need,
Yeah, exactly. Yeah.
and who is ambitious and who is not ambitious, who is a
Yeah.
high risk taker, who is not a high risk taker.
Yeah. Yeah. And then just available capital. Maybe I've got some today and tomorrow I don't. And so it really just depends on situation.
Wonderful. Nathan, if somebody wanted to reach out to you and wanted to learn more about this subject, this is very intriguing and very interesting subject for many people. But I know there is segment of people who are aware of these things. What is
Yeah.
there a website that you have that somebody can reach out to you, or what? How do you want anybody to reach out to you?
Yeah, best place to go would be to my website. It's earnestinvesting.com, and that's EARNEST, earnestinvesting.com. There's more to learn about notes on there. There's a link over to the Diversified Mortgage Expo. And in fact, within the next very short while, I'll be posting my book on there and how you can get it in
Hmm,
hold of that. That's brand new, just coming out. Pretty excited about that. So
very
you can get
exciting. Very
that resource
exciting.
as well.
Yeah, yeah. No, I think you also have a podcast, isn't it, Nathan?
Yes, yeah, we've got a podcast to do that every other week. It is called the Real Estate Notes Show,
Hmm,
and you can find that. We typically do that as a Facebook Live, but
hmm,
you can find it on Spotify. You can find it on Apple Podcasts,
hmm.
YouTube. Uh, Go and search that. You should be able to find it. Real Estate Notes Show.
Excellent. Nathan, thank you very much for joining us today and educating us on what is a mortgage note means and
Yeah,
how a small business owner, an investor can enter into this market and be able to find lucrative opportunities. And
great.
this is not a illegal, this is not a unethical business practice. Looks like you have a good business model, but very kind of a hidden gem kind of an opportunity in the market. So those who
Definitely.
are listening, if you are a business owner, if you are interested to do something like this, by all means, check it out and talk to Nathan and get more knowledge about it. But again, This is a show where we are not forcing you to do any financial decisions. This is purely an education, and you make an education, you make your own decisions, and that will help you own your own decisions. Again, I hope you all enjoyed this conversation here, and I wish you good luck. And if you have not subscribed to the BizBuzz show, please subscribe to us and make suggestions to your friends to gain some knowledge from a business perspective. Look forward to seeing you all in the next episode. Thank you very much for listening to us. Bye now.
Thank you.